Hey, what's up, everybody? What's going on? Um, Hope everybody's having a good Friday. Friday, what day is it? Sunday. A good Sunday. And I am gonna come on live and do the chart breakdowns. Hopefully, everybody has get some good knowledge going into next week. So I'm gonna wait for a couple people to hop on, and then we're gonna go ahead and start doing these things. So hope everybody had a great trading week. We'll talk about my trading week in a second. But I'm gonna go ahead and share this to my Facebook page and my Instagram page and start doing this real quick. So give me 2 seconds. Um, while we're waiting, I don't think anybody's on, but this will be obviously recorded for everyone. Um, but I want to talk a little bit about last week's price action. We're gonna talk a little bit about my current journey and where I'm at right now, and then we'll kind of go ahead and get into the charts. So give it a couple minutes and we'll get started. Straight by general, straight view. It's a lot of man coming through. I had a chance to check out that Cole album this weekend. It's been in heavy rotation. Not sure how I feel about it yet, but there's definitely a couple of joints on there that I'm gonna get put into rotation. Um, so yeah, so I got my trading view, got my thing up right now. So give it 2 seconds so we go ahead and get started. So again, this is going to be a weekly call. I've been doing this for the last couple of weeks. For the first month, I've been doing this call via Zoom, but I think just to make it easier for everybody, so they don't have to wait on me to upload things. I'm going to be back doing my sessions on here and basically broadcasting these out on YouTube Live, Instagram Live, etc. So you'll see these Instagram Live, Facebook Live. So pretty much every channel where there's a social media platform, you'll be able to see uh, what's going on. So uh, boom. So give it like 2 more minutes. Uh, and then I'm gonna switch over to my personal page, and we should be good to go. Okay, so let's go ahead and get started. I don't know if I'm gonna check this and see if anybody's on here. I don't see anybody on, but it's cool. All right, so basically, what I do on these calls every week, and then, like I said before, is I break down the charts. I break down, what I think is going to happen, going into the next week. I'll also talk a little bit about where I'm at, and I really want to use this to document my process, right? So I've done this on YouTube for like the past couple of years, but now we're kind of entering a new season, and really, the point of this is really just document everything. So when I'm in the position, I want to be able to trade for a fun one day, and that's kind of the my goal, or obviously just keep doing my own thing, and so really it's just documenting the process and showing that anybody can really do this too. So first and foremost, let me go ahead and share my screen. So I like to start these calls off by like really talking about where I'm currently at in my process or my journey trading wise. So I'm going to share my Tradeify journal. So I'm trading with a prop firm right now. One of the prop firms that I trade with is called Tradeify. And so, we can see that there has been, a lot of progress made this year so far. So Tradeify, again, is a prop firm where if you pass a couple challenges, then they'll pay you out. Oops. And basically, uses this as a way to fund traders who actually have a good skill set, right? And so, if you don't know anything about me, then know that I've been doing this for the last decade. A lot of a lot of L's, but a lot of learning experiences, and so now my trading is finally in a place where it's really good. So, a lot of people online say, "Hey, like I want to do this," and just want to again show people what it kind of takes to do that. So coming into the preparation. So basically, I had a really good January. So coming into January, we were able to lock in uh, about 20, well, about eight. It was 18K for the month, and then over the course of pretty much the entirety of the month, it had two red days. Um, between the first week of February and all of January, I had about a 70% win rate. Um, so coming into this past week, I was able to lock in about on this calendar, it's about 5.6. But there's another account that I'm actually actively trading as well. So there's another firm that I'm working with, and so that was another $1,000. So it was about 6.7, 6.8 technically, um, for the entire first week of February, which is crazy when you think about it, right? So we're actively making our way towards these accounts and really, getting funded and payouts, and really more importantly, building a track record for when I want to take this to like firms and stuff like that. So that's the most important thing. So I want to continue to highlight this, and then I want to be transparent in my journey because I know there's a lot of people online that necessarily show up their trading journeys and don't necessarily have anything to prove. So and it's just a lot of buy my course or do my that type of thing. So I really want to show people this is possible. So again, let me go ahead and share my screen over to the charts. We'll go ahead and break things down. The next thing that I usually do typically is I look at Forex Factory. So coming into a given week, I want to make sure that I have all the information that I'm looking at. Um, and know what the big major news releases are for obviously the US dollar, which is the major thing, but then really for the assets I trade, which is a lot of currencies and a lot of indices, really understand what news or economic news releases or factors could factor into uh, affecting the market that week, and kind of playing your week around that. So looking at the news, I don't see any red folders. They're going to be usually the major movers in the market. So we're going to have, for some reason, my charts are set to, Central Time, but at 8:30 a.m. EST. This is on CST. We have core retail sales and retail sales, which would be, movers in the market. Then also we have Wednesday, we'll have non-farm employment change. Going into the 12th, we'll have unemployment claims at 8:30. And then Friday, we will have core CPI news at 8:30. So no crazy news. I thought we were going to have NFP this week, but this is not. Uh, uh, yeah, this release is basically NFP. So non-farm employment change got delayed by about 5 days. So this is basically NFP. So I probably will be out, of the market. It's a little weird of a week, but since NFP is on a Wednesday, usually it's on a Friday, the first Friday of the month. My main trading days are probably going to be Tuesday, Wednesday, and then if I catch anything on Thursday after the fact with that 8:30. So this kind of helps you just plan my trading week and help me figure out days that are going to be the most volatile, right? We love volatility as traders, so we want to make sure that we are trading around those things. So let me go ahead and go pull up the charts. So the next thing I usually do is do the breakdowns in the charts based on the projections that we had for the week, and see what we can do, and then obviously formulate what we think the market's going to do for the next week. And so it's kind of like the meat and potatoes of my breakdowns. So I usually just talk a little bit about what I think basically what I think the chart's going to do next week, right? And so come into the U.S. dollar again. I trade with a little bit of the idea of smart money concepts, and it's kind of one of the bigger things that I do. But it's really just a lot of people complicate it, but it's really just this idea that the market moves based on liquidity. And if you understand where the liquidity is in the market and where the buyers and the sellers are at, then you can be able to kind of project where you think the market's going to go, right? So it's a very logic based system. But yeah, so let's go ahead and break this down a little bit. So I'm over explaining things today because I have this shared to a couple other sources or a couple other platforms I usually don't have them shared to, which is why if you've been here for like a year watching me, then you're like, why are you explaining it like this? You already know. All right, so coming into the charts, right? So there's a couple things that happened last week. I'm gonna get rid of all this, but as you can see here, we've spent the last couple weeks really formulating this low that was formed. I don't know why my charts are like this. TradingView updated their thing over the weekend, or I can't see any of my levels. So weird. Let me see what happens if I do this. Let me see if I stop sharing, if it changes anything. It doesn't. Okay, whatever. Let me bring it back and share screen. I don't like that because I can't see any of my numbers. If anybody in the comments knows how to change their layout, let me know and I'll adjust, but it's annoying. Okay, so anyway, so what I'm thinking is for this week, if we look at things from a higher time frame perspective, right? Usually I like to start in the weekly and kind of understand what I think the next week's of price action is going to do. We can see that we did sweep this old low here, right? We did take out sell side liquidity here and any resting sell orders that are sitting below this low here. Again, I'm sorry, I don't have my levels numbers here. I don't know what's going on. If I figure it out, then I'll adjust. But so ideally, what I want to see here is the market trade back into this fair value gap. And obviously we're kind of at an indecision point in the market where the market could potentially run higher and run through these levels, or it could respect this fair value gap and keep on running lower, right? So again, I have to stick with the bias that the market is going to run lower, even though we did sweep these levels here. So I do want to see the market potentially continue to go down. And so what I'll be looking for here in the higher time frame weekly levels. Bro, what is going on? Oh, there we go. You know what I'm going to do is I'm going to share this tab instead. Let me stop sharing that and then share this. It's a live call, y'all, so you know how this goes. All right, boom. So I got my levels. I got everything here now. So you can see here that the market really took this level here at the 95.83 level. And so we came down here, swept this and ran lower, but now we're respecting consequent encroachment. So this is kind of like a wait and see kind of approach. I need to know what the market wants to do, right? And understand, is this sweep, part of a bigger move where we're going to start running back higher? Or are we going to respect this level and come back down, right? So we're kind of at an indecision point where you don't necessarily know 100%, and that's okay. We never know 100%, but it's more like a 50-50 chance right now. So what I'm really waiting for is to understand if the market wants to continue to go lower or invert this gap or run higher. So I'm going to be prone to look for sell opportunities until if and when we fully invert this gap. And if we do, then I'm going to probably switch my bias and start running and looking for higher for us to maybe take the buy side sitting above this high here at 99.17, right? So until then, and it looks like we are respecting this level now, you still have to kind of stick with the bearish bias, even though you saw this sweep, because the sweep only really means something if we invert a level or if we break structure or anything like that. So I'm still sticking with this idea that the market is going to run lower. And I just got to wait until we get more of confirmation, right? Maybe trading above consequent encroachment or something like that. So really just understanding what the market wants to do. And so we'll know coming into Sunday, Monday, if the market decides it wants to run the last week's high, maybe trade above this old high here of last week. maybe take that out, swing that, and then run lower. So something like this. And I spend a lot of time looking at dollar because again, dollar is probably the most important asset out of everything. If you can understand where dollar's going, you can understand where all your currency pairs are going to play. You can understand where all of your indices are most likely to play to. And so long term, I'm actually very bearish on dollar. I want to see the dollar run lower, which is obviously not good for my pockets in the long term. But I think we could get down to like $88 or 88. So taking this level down here, or even if we go a little bit further to the monthly time frame, higher up, coming all the way down here to about the 88 level is kind of where I think we're gonna get 89, 88 level. So with that in mind, again, I do want to see the market continue to run bearish on dollar, taking out the old high, right? Last week's high, and maybe trade playing in this gap and then running lower. But if we do invert, then again, I'll start to switch my bias and start to look for more buy side targets. So with that being said, again, I gotta stick with the other bias here. So last week on Euro, this is Euro futures. Again, if you're a futures trader, it's going to be the same thing as like your Euro USD if you're a currency trader. We did have a kind of the similar thing go on, right? Where we came down to this low right here, swept this level, right? Now the bigger time frame version of this looks a little bit like this. If I go to the weekly time frame, Euro and dollar tend to run inverse of each other, right? Because they are the two biggest currency assets. So understanding that, you can see here, we came here to this old level and took buy side liquidity there. We ran that, traded back into this gap, and we're kind of in the same place that we are on dollar, but just in the opposite end. For instance, if I show you here, right, what dollar's doing, dollar, you'll see it's pretty much the same thing in opposite direction. That's the relationship the dollar and euro have for each other, right? We came down all the way to these lows, swept these lows, came all the way to this high and swept these three highs right there, right? So same idea. And now we're trading into these gaps. And so I made a note to my students last week when I was breaking down these charts, and I was like, hey, I want to see the market really invert this gap to go lower. And that will be my confirmation that it's time to go bearish. Until then, I have to stick with the bullish bias and I have to look for something long, right? Now, I'm not just entirely relying on this. My students, we know that there's a lower time frame setup that we want to see, to give us more clarity. But I do like what I'm seeing here when we look at consequent encroachment of this fair value gap, right? So prices has been respecting this 50% level for some time now, right? We set this initial low here, had some relative equal lows here, and then the market came down with that, and then really broke structure on the what is this, the 4 hour? So again, I can see a world where this market could run lower, right? And I want to be wary of that because I don't want to say like, man, it's 100% going up or it's 100% going down. We're kind of at an indecision point in the market, and when you have these levels here, the market makers know where they're taking this. We don't necessarily know, so we have to kind of play things defensively and say like, okay, well, this is a level that if we break this level here, we're most likely going to come back down and invert this, right? So I would like to see something like this where we come back down, trade it back into this 4 hour fair value gap, and then the market still tends to run higher. And maybe the first target I would see is this level here, right? So we would have like a 40 or 50 point range, or we'll just keep running higher. There was a lot of friction up on the top end of this fair value gap. So ideally, I'm going to stick with the bullish bias here because we haven't really broken structure yet. If I take a loss and we find ourselves trading below this inverted this fair value gap and kind of inverting it, I'm switching my bias, which is cool because long term, I mean, if we invert this right here, then we have at least a 200 point drop for a pip drop from here to there. So there's definitely going to be opportunities to make back any potential losses if that were to happen. So I'm cool with that. I'm cool with either one. So I am going to be not aggressive, but I'm going to play things safe and look for our buy opportunities, especially when you look at how the levels reacted in this range. Again, we came down to this level once, tested it, reset it, and you can see we're actually in the process of potentially running back up again. So that's kind of what I'm thinking. Now Monday could change this, right? We could definitely just tank coming into Monday. And so, again, I'm being wary of this. But coming into the week, you always want to have like not a strategy, but a particular outlook and a bias in the market, so you can kind of help frame some of your trading decisions. Otherwise, you're kind of just trying to trade both sides of the market. So, um, so shout out to Tony. Shout out to Tony for hopping on. Um, so then the next thing I want to look at is GBP. GBP should be running very similar to euro, right? And so we should have some type of the same correlation here. We can see here that euro did actually pound did actually respect its weekly fair value gap a lot more. Let me get to GBP JPY. I don't want GBP 6B. It did respect it still. So you can see here that we did trade into this weekly fair value gap. So let me go over to the daily and see what's going on here. This looks very promising. I would definitely say once if we took this high, then and obviously inverted this civvy here, then I'm most likely going to be bullish moving forward. If there's a very, very clean opportunity, I might try and take it. I am wary of the second one there with that order block. So I want to see what the market has in store for me before I take things a little bit higher. So ideally, I'm looking at these two levels to kind of give me more of a bullish confirmation inside of this gap, right? This fair value gap from that level to that level, right? And really just inverting that and taking things higher. And so really just going to be patient the first couple of days and really see if I can capture something based on that. So again, I feel like we came down here and mitigated these orders. So I'm feeling confident about this. But if we go to the 4-hour time frame, we haven't fully broken structure yet. So I need some type of inversion, some type of break of structure that lets me know this would probably be the safest level. So if we inverted this fair value gap here and the market did something like this, where it just tap, retrace, and boom, then that would make a lot of sense to me. It'd be a very clean break of structure. You'd still probably have the opportunity to get 73, almost 150 points, 150 pips on that. So it's a good setup. I'm briefly going to look at the other currency future charts. So 6A1 is Australian dollar. Same idea. This actually looks more clean. We did technically break structure here. So I like this. I actually like these to go back up, and this is beautiful because it respected that gap entirely. You can see here again, euro might actually end up being the best trade this week because it's at a lower level, so it gives you more time to buy. But the safer trades are probably the ones where the market's already starting to turn around, like this on Australian dollar could be a very good clean setup next week. So I could see something like this where we trade back into this range here, or we trade back down to the fair value gap, right? So we do something like this and then take things higher. So 6J probably inverse. We probably want to see this run lower. This is kind of messy, but sitting in that huge gap range from that level, and then there's also volume imbalance inside of that. So I can see this running lower for sure. I think this is more likely to run lower than it is to go higher. Yeah, 100%. That thing is taken. Obviously, these aren't signals. These are just my thoughts in the market. Obviously, laid out for educational purposes. We could see another bullish run from NASDAQ. NASDAQ is an interesting place because just like last week, I said, hey, I want to see more information on currencies. This week, I kind of want to see more information on NASDAQ because we could definitely keep taking here. I could see us trading back into that. We did trade back in that range. Maybe take out the high of last week, like this, the high of Friday, I guess, and then immediately reverse off of that. All right, to continue to go lower. Could definitely see that. ES, same level here. We took this high, stayed above it. So this actually could mean that we're gonna, let me see. Thank you. Both close above it. It's really above it. Um, yeah, I actually think this could be more bullish than anything. Um, so yeah, I'll really be watching how we if we invert this gap and how we treat this order block here, just to get a potential bullish setup. So let me look at YM. Then I'll come back to ES. So this is pretty much the same thing here. Like this one, you know, had a very overextended run. We were trading in this gap for a long time. I think a couple months, weeks, maybe, yeah, weeks. Um, so ideally, what I would love to see here, and you got to be careful of buying at the highs, but ideally, I'd love to see this market trade back down into this, whatever Monday's low will form the fair value gap on the daily time frame. So trading back into this or trading back into this order block here. So trade back into that level and then taking things a little bit higher. Again, not too happy about this one because we're trading at highs, right? So I think ES and NQ offer the best opportunity if we were to go long. I could also see a world where we run lower on all three of these. So I'm really going to be paying attention to what happens going into the session on Monday. Some weeks is very clean cut, and you're like, I know exactly what I'm going to see from the market, and then other times it's just like, man, like this is not clean at all. Um, I I'm gonna look at gold. I know a lot of people are trading gold right now. They love the volatility. A lot of people are blowing accounts, I'm sure. Um, but gold looks actually pretty decently solid. So on a week to week level, we got the market trade back into this order block here. Respect both fair value gaps from that range to that level and that level to that level, and then close well above it. I'm looking for us to tap this level here, obviously, but which is the all-time high. But the other issue that I'm looking at is, can we get through consequent encroachment on this level here? So um, that's what I'm looking for there on gold, to see, can we get above this consequent encroachment level, right? And I think I'll feel very happy, or very. Uh, I mean, most likely this looks like it's going to keep trading back up, but I feel a lot safer about long positions if we take that 5326 level and close above it. Not just wick off of it, but actually close above it. So that's gold. We did ES, we did YM, we did NQ. If there's any other assets that people want to see, let me know. I just want to take a look at Bitcoin. How Bitcoin has been acting crazy lately. And so like the thing about Bitcoin that like throws me off, and I know everybody's really big on Bitcoin in the investing space, is that one, we don't know where Bitcoin came from. We were just told it's valuable, so you need to buy it. And the whole world started buying it. And then we know that there's a lot of uses for Bitcoin in terms of like transferring money and things like that. It was kind of pitched to us as being like this whole like can't detect it systems, where they'll never be able to find it, or untraceable payments. But you can literally trace people's accounts and kind of make guesses of who they are, based on the payments. Like we know Satoshi, or whoever the guy that founded it, his wallet, right, and how he hasn't sold any of it. So it's not really anonymous like they say, because it's still all in a ledger. With that being said, this could definitely go lower. I could see this taking 49,000 easily. I could also see it running up. The crypto, I don't really make a lot of predictions. So this is not really my space. And I won't ever trade this. I won't really invest in this either. And like, if it got to a certain level lower, I probably would say, okay, let me throw some money into it. But like, I'm not these swings are too volatile. Like you're losing half of your money. Imagine if you bought at the top right now and you're like, I need a few Bitcoins. You'd be down almost half of your income. 126, you'd be down over half your income or almost half your income in like since September, right? And that's cool. Don't get me wrong. And it did run this liquidity here, but geez, bro, that's a that's a crazy pill to have to swallow. So I can see a world where we trade back into this gap here and then run lower. So that's what I'll be looking for. So, if we do see one more rally, don't get too excited. Still looks like long term we're just kind of playing that game. So I would say 49,000 would probably be a low. I don't know if Bitcoin's topped. I don't know. Can't tell you what's gonna happen. That's not really my my forte. I could just think about basically based on the concepts that I know and how I see the markets, what I think could potentially happen. Well, this is a bearish market. I mean, anytime your investment is down almost 50%, and I think at the lowest it was down, we touched 60,000. So yeah, I mean this could definitely be bad. Could definitely be bad. So we'll see what happens. And there's 2 hours left. So this is the last week's candle. So yes, the market opens up in 2 hours. So see this trade in lower and go, up higher and lower. So it's not looking too great on Bitcoin right now. I heard gold and silver kind of the same thing. So that's very similar to gold. We trade into an order block. We'll end up probably respecting this fair value gap. So we'll see. We'll see. And then I just want to talk about some of my trade setups this week. So I keep this very general. But I took 3 setups, I think, this week or 4 setups over 3 days. So the first one was a YM long. So we'll talk about it on Monday. We'll talk about what happened this past Monday right now. So let's go back. February 26th. It was Monday. It's past Monday. I longed it. Now, normally I don't trade with the bias on Mondays because the power candle usually forms. But sometimes you see the trade and you're like, just take it. You know what I mean? Like you have to, if it fits your criteria, take it. And I'm getting better at just not overthinking stuff. I've overthought trading for a long time. So so I longed it. So when did I go long on this? Traded by journal. Long at 9:30. So I went long right off the open. And did not close. I think I took like 900 out on the day on each account. Let me look. 700. So I was long one contract. So coming into the session, again, your New York continuation play. Took the lows here, took sell side. Right there. So we took those lows there. And so coming into New York session, I think, which was right about here, saw the market trade into this fair value gap. So I've already taken the lows of the day. We were trading at this point well above the high of Asia, right? So saw the market trade back into here. I think my specific entry was at 934. So I think I ended up taking actually this run right here. Go down to here. Actually break this down to the 1 minute because I want to know exactly where I got in at. longs at 934. That's crazy. I didn't really get too great of a. Maybe I was out at 934. Hold on. And closed at 954. Okay. Sometimes these trades have been, like weeks. It's been a whole week since I've looked at these, so I'm not too sure. So I closed at 954. Was shorting? I had to be shorting. This is January. That's why. I was like, what the heck? Yo, like, what is going on? Okay, cool. Let me go back to Monday. I was like, what is going on? Okay. So coming into the day on Monday, if I break this down to a 15-minute time frame, again, we did have a bullish bias. By the time I came to the terminal at 9:30, I saw the market potentially wanting to come back down. Again, I thought we were closer to our overall target, which was the high of yesterday and the overall, or the high of last week's high. So this up here. So I came in initially, took the trade thinking that the market was going to get here. Saw that lined up with the second standard deviation. So I was like, all right, bet. And coming into the day, I initially longed this based off of the running of the sell side here, right? Again, so pretty much our standard setup. Took sell side there, closed above the high there, left this fair value gap there. When the market formed this initial fair value gap, the market traded back into it at 9:30. Actually, I'm sorry, when the market inverted this is when I really went long, because I saw this gap there and I was like, okay, cool. We're most likely probably going to trade back into this, or maybe the 15-minute gap, which is the bigger green bit C that you see right there. So I was like, worst case scenario, we'll probably do something like this. Because I got to ask myself, like, what if we took sell side here, we took buy side here, and we're well above this gap, then most likely we're probably going to keep running. And so I ended up getting out at 9:50. I think my exact execution was 9:34. So right, basically 9:35. So like this candle right there. So basically when the market was sitting right there, I was like, we're probably not going back down there. We looked down here, we took this, we stayed above, we took sell side already. There's no reason for us to want to go back down there. So again, saw the market trade into that gap there, gave myself grace because I said we could potentially run back down to at least the low of here. And so the market took off and we hit our target pretty much, in the next few hours. Where I ended up exiting though was right around 9:50. So pretty much we had taken that high, which at that time was the high of the day. And so I was cool with that. But it wasn't a great exit. I ended up exiting early and we ended up running up a lot higher. And so I was kind of nervous about this trade only because it's Monday. I usually don't trade on Mondays. So anything you can get in. And so I looked at the terminal and I was like, okay, if I'm up 700 on each account, or about 3,500, I think it was like 42 across all the accounts. Why play with this, right? Why just lock this in, call this a good trade and keep it moving? And so it's kind of been my mentality a lot with trading, is like, what do we got to do to lock in the wins? And if it hits the rest of the run, cool, right? Just know you were right, even though you didn't take full advantage of it, right? Especially if the setup isn't ideal, right? If it's not the right day, if it's against the overall bias or kind of how you think it's going to play out, don't be afraid to just take profits sooner. You'll save yourself a lot of heartache watching the market go against you. In this particular case, I would have been right. and I probably would have made about 3 times what I would have made by getting out. So in this case, I didn't play against you. But again, you're the person that has to manage the trade, so you have to kind of like be cool with that. Um, so 10, I was out, yeah, at 9:50, I believe. I was out at 9:54. So basically from this candle here to here, it was my run. So I captured the bulk of that morning move. I mean, we did go up a little bit higher, but I probably would have doubled my profits if I would have held. And my original take profits, you guys can see here, were pretty much this first target there. And then I thought if we got an extended run, we could see that. I'm trying to remember what happened there. I think we did end up taking that. So again, sometimes patience is there. And honestly, my stop wouldn't have been hit. Maybe it would have got hit right in there. So I wasn't really giving myself a lot. And a lot of that had to do with where I ended up getting in on the trade. Um, this was the market open. So it didn't really give me the best potential setup here. We didn't really trade back into this gap here. If I did that and we traded away from that, my entry was here, I probably would have held for longer. But since my entry was trading off of this fair value gap here, we had inverted this a couple times. I was like, all right, let me just get out here, right? Call it a day, get a win on the paper, and then you're good, right? So you manage those things correctly. So that's the first trade. The second day was actually the next day. I did 3 days in a row. I had a loss and a winner, so I ended up losing my first setup, and then the second setup was the one that I came back and won. So let's look at YM on the next day. I keep moving out of the way because my screen is in the way. So coming to the next day, there was a couple things that I saw, and so first and foremost, there was a lot of wicks going towards the high of the day, and so that kind of like let me go to Wednesday. So coming into the terminal, this was Tuesday, and so we saw that pretty much the high of the day of Monday. There was just a large consolidation here. We didn't really move between the high of that day, high of Monday, and pretty much New York session the next day. So coming into Asia here, you can see that we did take highs, we did run lows. And so I made a mistake coming into the day, or misanalysis, but I was able to correct it and kind of get on the right side of the trade. So initially, coming into 9:30, if we think about our continuation setup here, I saw the market run the high of Asia, right? Buy side, or taking out buy side there, getting those buy orders, right? And then take out the low, sell side. And so initially when I came here, I was like, okay, this is probably going to run lower, right? I was like, this is probably going to run lower, start the market off, and maybe we'll come here and take out the high, maybe the high of London, or maybe the most recent high in London, and then continue to run lower. And so what we actually got to open up the market was this huge fair value gap, or this huge imbalance up this way. And I started to chase this because I was like, okay, well, I could see us consolidating, taking out the highs, even though we took out the highs and manipulated and then ran lower. We broke structure and went up. And I was like, okay, cool. This is probably just going to be a continuation of bullishness. Maybe this is consolidation. manipulation, distribution, forget what happened here. And what I failed to realize here is that this high also was the high of London, right? And so there, the market is fair game for it to come back here and then run lower, right? It can take out the high of London, it can take out a high in London, but most likely the most liquidity is going to be sitting over the high of London, which in this case would be the bearish, the low of the day. So again, trading with the overall bias here too, we saw the market did actually have a bullish run, right? And so it's okay. So sometimes, chasing your bias will also cause you to get, a little disoriented. And so what happened is I ended up taking a long here, right, in the gap, and waiting for the market to come back up and take this. I figured, okay, well, we did run the buy side first, take sell side, but then the market did give us a huge break in structure. So it's probably just saying that it wants to go up for the rest of the session. But really, in actuality, what it was us running this level here, taking out the buy side. I'm going to say high of London session. And so the market traded back up there once, immediately rejected, tried to break through again, went through again, could not really stop taking this level, tap it up against this level and really get through. So that's kind of the number one sign that the market could potentially reverse, right? But again, this is a bullish break-in structure. We saw all the bullish characteristics there. And so what I should have did, well, to be honest, I don't know if I could have played this any differently. I think I probably would have still taken this trade. I think what I would have did better is probably get a better entry. I think my entry was up here or somewhere in this range here. Probably would have tried to take that entry there. And I don't know if I had to step away from the computer or something happened. So I wasn't able to trade that. So I ended up entering it later up here, I believe. But I would have probably waited for the market to continue to run lower. I also would have paid more attention to the 4-hour time frames. When you look and see the market's really having a hard time getting to this level over the past 1, 2, 3, 4, 5, 6 hours, 6 4-hour candles. So it's almost a day. So the market rejecting from that level there should have been a sign that maybe I should wait for the inversion. We also ran the high of the day, and no good really comes after chasing the high of the day. When we look at our standard deviation levels, right? Again, standard deviation is going to give you the bell curve basically of where you think the high and low of the day could potentially be at the best points. And so we pretty much had already taken that. We tapped pretty much the wick on this candle pretty much already been up here. So the immediate rejection was just us clearing out buy side. So I ended up taking a loss on this trade and ended up getting stopped out here. It was dancing around for a while, and I should have paid more attention to these wicks, right? But it's hard to do that again when you're so invested in the trade. And I don't know if I was over leveraged, but I was really emotionally invested in this trade. And so I think that's the problem there. But then, I did kind of catch this. And the minute that the market did that, where it ran these highs and then inverted that gap, that was pretty much my sign the market wanted to run lower. So I immediately, as soon as we inverted this, I immediately ran lower. And I think I jumped down to the 5-minute time frame. I think I ended up taking this short right there on this candle, 11:35, something like that. If I go to the journal, the ones that I won were 11:41. So I was in there at about 11:40 on the inversion, and I ended up riding that down for a second because I wanted to make back the loss that I had. And so I was targeting again the low of the day here, or the projected low of the day at the max standard deviation range, which is about 41,200, and it ended up running lower, and I was cool with that. And it ran through PM session. So again, you have to be cool with, again, potentially taking a loss. And it's going to happen, right? So really you got to be able to step back from the computer and say, like, how can I emotionally manage this? And emotionally managing your trade really has more to do with your risk management, your setup, and your prep work than anything else. Again, if you do all of your work and you do everything right, you're probably not going to be nervous when taking the trade or managing a trade for the most part. And so the number one thing you can do to manage your emotions is really just manage your risk, right? And manage your setups. And so in that case, not overly freaking out that you took a loss, right? One loss shouldn't kill you. If it takes a big chunk out of your account, then you probably are not trading with the right size capital for you. So that was the second trade. And the third trade I ended up taking, which was pretty much a break even trade last week, which was for $97. I'm trying to remember what happened here. I think this was NFP. I thought it was going to be NFP week, so I didn't really try to go crazy. The news was saying that NFP could potentially still happen, so I was like, all right, cool, whatever. 97. It was a short on YM. Again, this was kind of following everything that had happened the last couple of days. So by the time we got to Wednesday, we were already in a bearish run. I think my stop was somewhere around here is where I got out, actually. Think about it. I think this run just happened so fast after lunch or during lunch that I ended up exiting somewhere around there. I wish I had my executions on here still, but I'm not logged in to my account. Actually, no, I could just tell you what time. I can tell you what time I got out. I can just tell you that I got out at 12:46. About 12:46. So good trade because I made back the losses that I took and then ended up walking away up 2,000 for the day. So that was great. And a lot of times that first loss can actually tell you where the market is going to go, right? And so the whole time I was watching this market do this, I was like, man, if we can get this inversion, then I'm probably going to be able to take this lower. And this initially scared me because the market was trading, started waking off of this level here, drove down there 3 times without really closing below that low. But once it did, it just tanked. So I was cool with that. But I ended up now 12:46. So I was actually, it's a pretty deep run for me. And I ended up getting out just before the market rallied up again, which would have been cool because it immediately dumped a minute lower. So 46, I think I was out somewhere in there, which is obviously not a terrible trade. I saw the market take this low and I was like, all right, cool. I probably need to get out. It's like the low of last week. So yeah, I mean, it was a pretty good overall trade, overall setup. But I'm happy that that played out and got in the way that I was supposed to. So those are the three. Well, actually, this is the Wednesday trade. The Wednesday trade, I believe, was another short. And I think I took it on the micro YMs. Just wanted to give myself more risk. So yeah, wanted to give myself more risk on that. And so coming into the session, I saw the market take, I think right before our New York session, coming into the day, we'd obviously had this huge bearish run. The market did recover a lot overnight or going into that like 4 or 5 o'clock hour. But I figured the market was probably still bearish there because, I mean, look at what had happened the day before, right? So I was like, all right, we're probably going to keep going lower, but it's just got to run by side before it goes back down again. So I was pretty much waiting on the market to give us a bearish run. And I think right at 9:45, I ended up taking that short. And I remember sitting through this entire trade. It was annoying because I was figuring at some point we were going to break this and run lower. Why we spent the entire day pretty much working the top side of this liquidity range, right? So we traded up to the high of the day, and this was kind of like my reason that I stayed in the trade for the longest time. Is I was like, okay, we keep waking off the high of the standard deviation range, right? I don't think the market wants to go any higher for today. We did already take buy side. Only thing that's left in the market is sell side. And so I was in this trade from about 9, just like right before the market came down here, and like from about 9:30 to pretty much I was out at like 1:15 or 2 o'clock or something like that, I think. Let me see, go back to the trade. It was just one position, and it was I exited at 130, 127 to be exact. And so yeah, so pretty much on that candle. The moral of the story here is I entered too early again, and I fumbled a really good opportunity to make a trade here. Whereas, at that 9:30, 9:45 mark, I think I was in early. I think I might have been in earlier than that, somewhere around here. I waited. I wanted to get this inversion, right? And I entered this early, and I should have waited for a full close below this because I saw this and I was like, okay, this is good. And then we immediately went back up, and I think I entered somewhere here on this candle. Uh, and so I got put through hell going all the way through this before we came back down and took things out. And so if I was more patient, I would have waited for the full inversion, meaning that the market would have taken the lows and closed below this can at least this is a green zone right here, this green fair value gap. Best case scenario would have closed way below this. And I would have taken that. But I didn't get that. So I ended up being profitable, but nowhere near where I could have made. Probably could have entered somewhere in this range here, probably on the break of structure, somewhere in this range, and taken, this trade from 49,600 all the way down to where we ended up getting out at 26, or just taking it to the low of the day. Still 300-point gain. And then also my funded account failed. So really it should have been a $500 day. But it failed on me. So I didn't copy it over to all the accounts. It was just one. So kind of sucked. Definitely mismanagement. I realized halfway through the trade that, my like $300 or $400 that I was up. Cause I was up like 200 or 300 and I ended up closing it at about 100. But that I realized halfway through that $300 that I thought was going to be copied to 6 accounts for a $2,000 day actually was a $100 day. And so that kind of sucked. But that's just why you got to check your stuff before you take each trade. Make sure your trade copiers and things like that are going. But again, overall, pretty solid week. I, could have been better. I could have managed a couple of things a little bit better this past week, Wednesday specifically, and that most of that was just negligence and like me, making sure that everything was set up. But I think out of everything else, the first initial trade, I could have managed better on Tuesday, and then the second one was more of just me jumping the gun. So again, making sure you kind of listen to what I'm saying and to kind of learn from my mistakes and make sure that you heed that. Because at the end of the month, even if you have a profitable month, even if you're a profitable trader, those little mistakes can stop you from really turning the corner and really bringing home as much as possible. And so the more that I trade, the more I realize that, I tend to make, the less mistakes I tend to make, it doesn't necessarily stop me from being profitable and past that, but it stops, my, growing my P&L, and it helps obviously not making those mistakes, just adds to the number at the end of the year, at the end of the week or the month or the year. And you don't want to, realize that you gave back a lot of money trading and throughout the year. It's not a good feeling. So, but yeah, that's pretty much everything. So hopefully you guys enjoyed this. If you have any questions, please hit the Discord, the chat. It's usually when I drop my Talented 10th breakdowns. But if you want to go to talent10trading.com, this is actually my website where basically you can see, enjoy my free Discord. So I do a lot of breakdowns in that Discord, even if you don't pay for anything, whatever, it's cool. But I would say join the free Discord, take advantage of that full opportunity there. And just take advantage of that. I drop a lot of gems, and so every once in a while I do upgrade somebody to the paid mentorship. But the free mentorship has a lot of advice and a lot of motivation, and the community in there helps too. So if you guys have any questions at all, feel free to hit me up, and peace.